U.S. labor market shows resilience with strong May hiring. Employers added 339,000 jobs last month. Unemployment rate rose to 3.7%. By Gabriel T. Rubin. June 2, 2023, 4:33 p.m. Eastern Time. Hiring surged this spring, the latest sign the U.S. economy maintains momentum in the face of rising interest rates and complicating the Federal Reserve's decision over whether to pause rate increases this month. U.S. employers added a seasonally adjusted 339,000 jobs in May, and the prior 2 months' payrolls were revised up by nearly 100,000, the Labor Department said Friday. Workers gained more than 1.5 million jobs in 2023, more evidence of economic vitality, including robust consumer spending and a stabilizing housing market. The latest data does little to settle the Fed's debate over whether to hold rates steady at a meeting this month, but does suggest that if officials do so, they could favor raising rates later this summer. Stocks rose on Friday, with the blue-chip Dow Industrials advancing 701.19 points. The largest one-day point gain since November came after the strong jobs report and the Senate passing legislation that suspends the debt ceiling. A measure of financial market volatility fell to the lowest level in nearly 2 years. The U.S. unemployment rate rose to 3.7% in May, still near historic lows but an uptick from April's 3.4%, the Labor Department said. Average hourly earnings grew a solid 4.3% in May over the prior year, similar to annual gains in March and April. Fed officials in May lifted the benchmark federal funds rate by a quarter percentage point to a range between 5% and 5.25%, their 10th consecutive increase aimed at taming stubbornly high inflation. Fed Chair Jerome Powell and some colleagues have raised the idea of skipping a rate increase in June to study the effects of past moves. But other officials have said the Fed may need to continue to lift rates, and the May jobs data likely reinforces that view. The central bank had hoped to see higher borrowing costs cause the economy to slow more by now, curbing wage and price increases. The labor market and the economy it supports will just not go gently into that good night despite policy efforts to cool both, said Joe Bruswalis, chief economist at RSM-US. Even with a spring hiring jump, there were some underlying signs of weakness in the report. Unemployment rates rose for women and Black Americans, both groups that had seen joblessness fall over the past few years. The average workweek fell to 34.3 hours, the lowest since April 2020 near the start of the pandemic. As a result of fewer hours worked, average weekly earnings advanced at a slower rate than hourly earnings, and gains have cooled since the start of the year. The labor force participation rate, the share of Americans who are working or actively seeking jobs, remained flat in May at 62.6% and below the February 2020 pre-pandemic level of 63.3%. That partly reflects the aging U.S. population. Among workers aged 25 to 54, the participation rate rose to 83.4%, a level last touched in 2007. May's job gains were broad-based. Professional and business services, including accounting and engineering firms, added 64,000 jobs. Healthcare, including hospitals and nursing homes, added 52,000 jobs. Government employment increased by 56,000, construction firms added 25,000 jobs, and transportation and warehousing payrolls increased by 24,000. Service providers, including restaurants, have been a driver of job gains this year. Restaurants and bars added 33,000 jobs in May. Red Robin Gourmet Burgers, a 500-location chain, executives have added more positions to keep up with customer demand and to refocus their restaurants on better service. Red Robin is hiring more bussers and kitchen managers, as well as increasing training and incentive pay for managers. Wages have gone up, and so have productivity and revenue, said G.J. Hart, Red Robin's chief executive. Hart said the moves are intended to reverse decisions from previous years when the company used a more bare-bones approach to staffing that led to declining sales and frustrated customers. Understaffed locations would shut down whole sections of the restaurant and make customers wait for the remaining tables, and additional staffing means that is no longer happening, according to Hart. It's getting a little bit better on the labor front, Hart said. But you still have to make people feel wanted, make people feel special. Some sectors such as tech, finance, and manufacturing have shown signs of stress. The tech-heavy information sector cut 9,000 jobs in May. High-profile companies such as Facebook parent Meta Platforms, Goldman Sachs Group, and Grant Thornton recently moved to cut jobs. Overall layoffs have remained low and job openings ticked up in April, the Labor Department said. Workers, especially in tech, have largely been able to find new jobs quickly, although a new position might be less lucrative or at a company with less cachet. Manufacturers slightly reduced employment in May. Retail payrolls have been little changed since February, even as job gains have been widespread throughout the economy. Home Depot warned last month that its annual sales will decline for the first time since 2009. Power tools manufacturer Makita said it would lay off 213 workers at the end of June at close to of its 5 U.S. distribution centers. Sales of power tools took off during the height of the pandemic, but increased material and energy costs, as well as tariffs and inflation, have eroded the company's pricing advantage. The layoffs are the Japanese company's first in the U.S. in nearly 20 years. It speaks to the confluence of these challenging conditions, said Wayne Hart, a Makita spokesman. Write to Gabriel T. Rubin at gabriel.rubin@usj.com.